Hey, how's it going? It's Rocky. Today I want to talk about the ES, which is the S&P 500, and I'm just gonna go through what would have been the best trade for the day. And right now in the Pacific Coast, it's 6:15 p.m. It's Thursday, and if you've been following my content on Instagram, you know that I'm not in the Pacific Coast right now. I'm actually at a conference called the FinCon in New Orleans. However, it's my break time right now. I figured I just go through one of the trades or just do an analysis on the S&P 500 because if you were paying attention to the news today, you would have noticed that our boy Jerome Powell was interviewed at around 12 p.m. Eastern time. So anytime he is interviewed, the markets is always doing something crazy. So that's always, as a trader, that's something that you should always pay attention to. And some tips that I would give to when you would know when he would be speaking, either him or one of the Fed governors. One of the resources that I like to use is the CNBC Market Watch. There's a US economic calendar that I always look at every day when I trade. And on this economic calendar, if we go through today, for example, today is the 19th, you can see that it was right there. Jerome Powell was slated to speak at 12 p.m. Eastern Time. And then also, you also had the Chicago Fed speaking. And then you had the Fed Vice Chair Michael Barr speaking. You also had the Atlanta Fed President Raphael Bostic speaking. And the Dallas Fed Lori Logan speaking. So there were a lot of things going on, including, of course, the performance of Netflix last night, where they beat the earnings, and of course the somber results from Tesla, and that caused a lot of dip. And of course, what's happening right now in the Middle East. So there's a lot of tensions going on, and the reason that I'm just going through this is you just need to be aware of the macro, what's going on in the world. Even though most folks will say when you day trade, you just focus on the charts. I myself, I like to get a feel for how the market is doing, and that's when I normally just pay attention to the macroeconomics of the entire world. So this is this content I'm doing, just been doing it recently. I just want to basically look at a chart for the day, and what I have up here is the ES S&P 500. And if you're new to my content, essentially on the left here is a time-based chart, and on the right is a tick-based chart. So that's how I trade. It's just something that I'm comfortable with. It's something I've been using the past few years, and I've back tested a lot. And I just want to show you an example of that, right? And then the only difference is on the right, you can see the colors are a little different. I am using Heiken Ashi, and again, I mentioned it's tick base. And since I am using the S&P 500, normally I trade the YM, which is the Dow Jones Industrial Average. So for the S&P 500, this is actually, I'm using 3,200 ticks. And the reason for that is there's a lot more volume with the ES. You can play around with which one works. For me, roughly, I just picked 3200 T because that's about more or less 6 times the 512 T. All right, so bird's eye view, we're just going to look at how the day went. The yellow line that I have here on both sides was the close from yesterday. So the close from yesterday for S&P 500 or ES was 34, oh, my bad, 43, 42, 25. Okay, so next, just bird's eye view. I just want to zoom in to when Jerome Powell spoke. It would have been right there. You can see this. I'm going to circle it on the left side. Let me just actually, yep, I'm going to circle it right here. This is roughly the time when Jerome Powell spoke. And on the tick base side, I'm going to zoom in that same area as well, just to represent where that is. You can see this is around the time that Jerome Powell spoke. So here's my philosophy with Jerome Powell, okay? It's always 50-50. It's really rough to trade it. If you're new to it, I recommend that during this time you trade the micros and not the E-mini. So the micros is 1/10 the size of the E-mini. I sometimes you may get lucky, but trading when Jerome Powell speaks really feels like gambling, which is not something that I like to do and something that I wouldn't recommend to anyone to do because that's just it's not very good to be doing that. Uh, Basically, when Jerome Powell speaks, I try to wait either way before he speaks, where it's a little more muted, or way after he speaks to make some moves. So we're gonna look at the chart here just to just hypothetically, right? Try to understand when we would have entered, and this is where I'll go through the rules that I use again, right? So like what I mentioned, I would have avoided when he spoke, so it would have been about right here. Actually, I'll just show all of that so we have a good idea of where this is. So based on this on the left side, let me just zoom into that time-based chart actually, so we're on the same page here. So based on this time-based chart, if we were to choose when we would have entered, possible entry, I'm just gonna mark the two possible entries that I probably would have taken. And again, I know this is hindsight trading, but I want to validate that the indicators I do use do work. So possible entry would have been right here. That's number one. Second possible entry would have been here, number two. And yes, you're gonna say, yeah, you're just doing hypothetical trading, but bear with me here. I'm just gonna draw the horizontal lines on those 5-minute candles, just so we can compare what we're seeing on the indicators. Okay, so I'll just draw those two on the time-based side. And okay, now I'm gonna zoom down to the indicators. So that's the reason why I do the blue line, right? Just to see what we're seeing on the indicators. And what I use is on the top, stochastic RSI, and on the bottom there is the MACD, which is the moving average, convergence, divergence. I did not change anything. It's 12, 26, and 9. So just based on what you're seeing on the indicator here, um, on this one, it would have been on the MACD, I like to enter after a crossover. So this would have been an aggressive entry. So I probably would be a little cautious in entering it. And then if we look at the stochastic RSI, as you know, I like to short when we're on the oversold side. So when you're under 20 is when I like to short normally. So with this one, it would have been a little iffy. So what I'm going to do next is I'll just go through the tick base side for the equivalent, right, for this time. So for this candle would have been at 10:30 in the morning Pacific Coast. So if I go to the tick base side, so I'm going to change the chart here. So this is a tick base side. I'm going to look for the 10:30 candle. And the 10:30, I mean, I can just look down here. So just follow me in the bottom. Each histogram will represent wherever that time is. So at around 10:30, which would have been this one right here, so I'll draw a vertical line there on that 10:30 candle, just so we can have a apples to apples comparison. So just to go back to what we were seeing, right? Now let me just do a full screen. So the one we're looking at again is the one right here, first vertical one. So when I first looked at those indicators, I said, okay, I need confirmation. And my confirmation is really looking at the tick base side on the right side to see if they're showing me the same thing. And you may ask the reasoning for this. The only way I could say is it's just months or years, lots of hours of looking at charts, and only when those two are in the same signals do they work for me. That's when I would enter it. So I'll zoom in on the tick base indicator here. And on the tick base indicator, basically, you know, we wanted to go short, right? So if you look at the stochastic RSI, we were on the overbought side. So to me, I would have been iffy about entering during that time. And then if we look at the MACD, it was actually going from, crossing to the other side, which is a little bullish. And if we go back to the candles itself, just go back to the full screen here, and let me use a different color. You'd see that based on this candle, sure, you would have made money on it, but I would have been cautious in entering because I just wouldn't have been sure, right? And if I did enter, I would have been stuck in this area right here that I circled in yellow where it would have been flat. And the first 5, 10 minutes, sure, you would have made money. However, if you were looking for a longer run, you would have been really furious where it's flat here, and that's good 50 minutes there. So to me, that first entry may be possible, a little aggressive, but I would not have entered on that first entry. Now let's go on that second one. Let me just erase the yellow that I circled there. So on this second one here, so the second candle, this is probably when I would have entered, and the reason why is if I zoom in on that indicator on that time base, um, I'll use a different color just so it's easier to keep track. You can see on this one, you can see that it's on the oversold, which is when I like to short. And then if you look at the MACD, it's starting to diverge a little bit more. And you can see that from the histogram, right? It's going from a dark red to a brighter red. So diverging, it's going apart from each other, and you can see that difference really based on the size of the histogram. So that's what you're seeing on the time-based side. So next, if you look at the tick-based side, on that same, oh, let me go back. So on that candle that we were looking at, this was 11:30 a.m. Pacific Coast. So if you look, oh, I was not showing it, my bad. So where this pink one is, said I was around the 11:30 on the time-based side. And then if I go on the tick-based side, on this same indicator, and we look for the 11:30 candle, zoom out a little bit here. And sorry, the circles did not. I'm gonna erase that because it might cause confusion. So looking for the 11:30 candle, zoom out a little bit more. It would have been this candle. So let me zoom in on that. So 11:30. All right, right there. So on this 11:30 candle, if we're looking at the indicators itself, you can see that, definitely on the oversold side, and the same thing for the MACD. Starting to diverge, and I'll go back to the full screen so we compare the two. So looking at those two, you can see that they're showing the same thing, right? Stochastic RSI on the time base is the oversold. On the right side, the tick base is also on the oversold. And then the MACD, starting to diverge, very bearish here. And on the tick base side, crossover just had occurred. It's going downside here. So with this one, let's just randomly pick the number, right? Let's just say we shorted at 43.25.50. Let's just say that. Let me change that. So with ES, it goes by increments of 25 cents, and that's referred to as a tick. And for every 1 point, there's 4 ticks. And for every 1 tick move in an ES, that's actually equates to 12.50, $12.50. So I'll do the math again when we do the calculation. I'm just doing the hypothetical entry and exit here. So with this one, again, I would have entered at 11:30. I probably would have exited around right here. Ideally, right? I'm doing the ideal trade here. You never know what could or couldn't have happened during that time. So probably would have exited there. And the reason why is you can see on the stochastic RSI heading to the overbought side. And then you could have asked, well, there was a spike there. So yeah, again, I'm saying hypothetical, but really it would have been this one that would have been the ideal exit for me. And let's just say on this one we exited at 43.06, just for completeness sake. All right, so let's bring the calculator just to calculate hypothetically what that trade would have been. So let's say we shorted at 43.25.50 and then covered at 43.06. That's 19.5 points, which is pretty great. And then as I mentioned, it's each tick is equal to 1250. So with 19.5 points, see if I'm doing this right, it would have been times 50, $50 because 4 ticks is 1 point. It's 1250 times 4 is 50. So for that trade, it would have been $975. So to me, that would have been my ideal trade of the day. should I have taken that trade? And to be honest, I'm at a conference right now, so I don't have a lot of time to trade. But let me just show you the trade that I took today. So I'll switch this off. So the Apex ones, because that's what I'm using right now for evaluation. Let me just erase all that drawing I did. And for today, I actually did not mark it. But anyway, for today, when I entered, it was actually the trade I actually made is on that first entry that I mentioned. So you can see right here is when I entered. I did make some money from it, which is not too bad. And let me just share my results here. Give me a sec while I look for the photos. I haven't been posting this too much on social media, especially since I'm at a conference, like I mentioned this week. But as you know, I'm doing the evaluation for Apex. I'm on day number 5 on the 25,000 account. And give me a second while I took a screenshot earlier this morning. I just want to show you what the results were. Just a sec. All right, so I'll put it on the screen here. Let me see if I can zoom in a little bit, adjust that. So for today, October 19th, 2023, basically this is around 10:44 in the morning, Pacific Coast equivalent. And it was pretty good. On the 20 accounts, we had $397.50 for each account. And just bring the calculator here just to understand what that means. Again, these are evaluation accounts. It's paper money. It's not real money just yet. However, $397.50 times 20. That was like a $7,950 day. Again, paper money, but the goal is hopefully by next week will be with actual, performance accounts, PAs, and with those I can actually withdraw actual money. We're getting close to that. That's why I haven't been really releasing content. I've been focusing on passing this evaluation. This past 2 months on this evaluation experience, I call it more of a research period. I think I finally figured out which account works for me, which is the 25K accounts. And you can see here we are at 26,214. I don't want to jinx it because I did jinx it the last time, but the goal here is to get to 26,500 and minimum 7 trading days, and we'll finally have, 20 PA accounts. But that's where we're at. Hopefully you enjoyed this series I had on, the best trade of the day from the ES. Please give me some feedback if these are helpful or not. Always great to hear from everybody on what's going on or what works for people, right? On what they see. All right, thank you for joining me this evening. I'll try to be more consistent on these trades of the day content when I'm back home. But have a good one, have a good evening, and good luck trading. All right, I'll see you in the next one.